Hello, Oracles. Well, we're going to do a quick follow-up on what we found out yesterday from the IRS and what vehicles qualify for the EV tax credit for Tesla. So the big one here is the long-range Model Y, which the 5-seater now needs to be under $55,000 in order to qualify for this EV tax credit. Looking at the stock price this morning, we are still up and continuing to outperform the market. We haven't opened yet. This is the last trading day of the year. Who knows what's going to happen, but it seems like this news has not really either hit the market or they kind of anticipated it. Maybe the bigger focus is going to be production and delivery numbers on Monday. So again, no movement in the market based upon this information yet, but we don't have a ton of details and definitely no feedback from Tesla on this yet either. You guys in the comments gave some great suggestions as to what Tesla may possibly do to be able to combat this in 2023. And before we get too far into this, I want to thank you guys all so much. I had mentioned on last night's video, it was my son's birthday. We were trying to get him to 50 subscribers. I wake up this morning, he is at 50. You guys are all so amazing. Thank you so much for giving my son his birthday wish. So one of the options was to put in all of their vehicles a removable third row seating. This way, all of their Model Ys are going to qualify as a 7-seater and they can then hit that $80,000 level. The thing with this is it's going to add an extra cost for not only the consumer, but also Tesla. So while this sounds good in a normal market, going into what is potentially going to be a recession, people are going to want to spend less. People are going to want to spend less money. They're going to take away those extra things because they're going to try and cut costs. Don't forget that that extra money, let's say it's going to be $3,000 for that extra third row, is going to get financed in at a much higher rate. As I had mentioned before, with a credit score of over 800, my interest rate is still 5.99% for financing. So that $3,000 is going to be significantly more over the term of that loan. So to me, it does not make a lot of sense to do this. And while you may think, well, you're going to end up getting $7,500 off, so you're realistically paying less, don't forget that does not apply until 2024 when it becomes an actual rebate. In 2023, it's still just a tax credit, so you still need to pay that money up front, and then that's going to come off of your taxes when you file in 2024. So a bit different here in 2023. In a 2024 scenario or in a non-recessionary scenario, that would make a lot of sense. As of right now, that does not make good sense for Tesla to do that, in my opinion. But again, we'll wait and see what Tesla does. Another option, and this is something, don't forget, when Austin first started producing back in the spring, we had heard rumors that they were going to be coming out with the structural battery pack and it was going to be a standard range Model Y. And now since that time, we haven't really heard anything about that. So I wonder if, and maybe this goes along with Project Highland, perhaps they are going to be doing a standard range Model Y that is going to come out and is going to qualify for this EV tax credit. On top of that, many of you had mentioned that they could do a software add-on afterwards. This is something we haven't really seen when it comes to vehicles. Definitely not with ICE vehicles. We obviously see this with smart devices where you can go and make your device better by using a software add-on. Obviously we have this with microtransactions in video games all the time. Perhaps this is a route that Tesla ends up going. Maybe we end up seeing a standard range Model Y with some software add-ons to make these improvements afterwards. This is something they are most likely going to be doing with FSD as well. I have no doubt in the near future, we are going to be seeing a subscription-only model when it comes to FSD. Elon has told us before they are eventually going to be going to that, and you're not going to be able to buy FSD with a lump dollar amount. Right now that is $15,000, so you would definitely not qualify for the EV tax credit if you added FSD on the way it is right now. Something we could see them do as well with FSD and the lump pricing is some creative financing where you can finance the vehicle itself, do an FSD add-on, and just lump that into your financing as well afterwards. Don't know if they're going to go that route, but that is also an option that they can do. So lots of different options. I think the standard range Model Y makes the most sense. Now we do need to remember that back in 2020, the long range Model Y was $54,000. So before all the costs of everything went up due to COVID and supply chain issues, we saw the vehicle price was below $55,000. So if the costs of materials and everything are coming down, and I highly doubt that they're going to be coming down to the same price that they were pre-COVID, but if they're coming down, and Tesla scaling up in turn also lowers the cost of producing vehicles, especially as we hit higher economies of scale, that might make sense. Perhaps the cost of this has come down. I go back to what we talked about before with the $7,500 rebate that they're giving back right now. We are seeing Tesla kind of testing these waters. What is demand going to look like with $7,500 off? What are our bottom line numbers going to look like with $7,500 off? And they are now going to have a good 2 weeks of data for all of this information. They know what demand could look like. They know what their margins could look like. So they have this information to now play on to determine what they are going to be doing with pricing and options going into 2023. And also, as some of you had mentioned, perhaps this is why Elon on the Twitter Spaces had spoken about, taking margins down to zero, really taking margins really far down to be able to qualify for this. Now, Elon in the past did say that Tesla clearly does not need this at all. Tesla does not need the EV tax credit. They're actually going to be the largest beneficiary of this because they are producing and selling the most EVs that are out there, but they don't need it at all. So Tesla right now is literally in the driver's seat where they can either, use their demand levers, bring their demand up and really squash competition, or they can allow competition to keep coming in by not lowering down the Model Y prices. I don't foresee Tesla just leaving it the way it is and not changing prices and not having the Model Y qualify for this. The Model 3 already does. We know with Project Highland coming out, that's supposedly for Model 3s. If they are starting that in Fremont already, we can probably see that rolling out by the February or March timeframe. So maybe they're looking to just do it for the Model 3s. Again, right now, the biggest change is going to be the long-range Model Y 5-seater. That is the only one that's kind of in limbo. So we're going to wait and see. And again, I don't know the Model 3 performance. That wasn't even on the IRS list. So that may be something that Tesla just doesn't even deal with. Another thought I had was they do have a good cushion when it comes to the Model 3. Maybe they bring the prices up of the Model 3 to offset bringing down the prices of the Model Y. But then the Model 3 and the Model Y are very close in pricing, and that in turn may end up cannibalizing the Model 3. But we've seen that basically happening all year long anyway, because the pricing on the two has been very similar. So a lot of questions that are out there, and you guys had a lot of great options that you gave over. If you have any more, please share them in the comments below. Because right now, I think Tesla is going to make a good decision. I don't think this is obviously going to hurt their business in any manner. 2023 is going to be a challenging year as it is, but I think Tesla is going to come out of this stronger than anyone else either way, regardless of what happens with this EV tax credit. And then remember, when we get to 2024, it does come off as a rebate, and at that point, economies of scale will be significantly higher. Austin's going to be ramping significantly higher. We are going to have a lot of other cost-cutting measures going on. If we do get deflationary pressures, that means that costs of goods sold are going to come down significantly as well, thereby allowing Tesla to drop prices and not take as much of a margin hit. So over the course of the year, this is all going to smooth itself out. It's just a matter of how is Tesla going to adjust now to be able to change that down the road. And so again, today looking at the charts, I'm going to be looking at that $122 level. As of right now, at the time of this recording, we are up just over 0.5%, almost at that 123 level. So if we can continue to climb from here and go up and close above 122, we will then wait and see what Tuesday looks like when we get the production and delivery numbers on Monday. We will see pre-market. We're going to know right away exactly how the market's going to react. Heck, when we get the numbers on Monday, we are going to basically know how the market will react to this when we get to Tuesday, most likely. Unless, of course, we fall right in line and then you just have no idea what the market's going to do. And now, if we do close above that 122 level, the next level above here for a level of resistance is going to be that 137 to 138 level. So if we close here, that may be the next range. But again, Tuesday is really going to kind of determine whether we're going to be, in the lower range or the higher range, and we'll just pay attention from there. And if there are any questions out there, I know that there was a story that was broken about Elon getting margin called. I said it on here that that was not true. That is not the case. The reason he had sold most recently was to avoid that margin call. And Gary Black came out on Twitter and debunked that. And Gary broke down exactly how all of the financing worked and the fact that Elon was not on any margin. And since then, Barron's, who had put out that story, have now corrected that story. So just in case you guys were concerned, Elon is not getting margin called. This is not going to be an issue. So when we go back to Elon on the Twitter Spaces saying he is not going to be selling in 2023, some people had brought up, well, he could kind of get around that. And if he gets margin called and then you have to force him to sell, that's kind of him skirting the system. That is not the case. He does not have margin right now. This is why he had been saying all month long, do not be in margin during these times. He's been through these times in the past. He was screwed twice hard during the last 2 recessions that we had. He is very cautious. So he is now taking care of himself here, has no margin. We do not need to worry about that. Seems like Elon has definitely protected himself, Twitter, Tesla, and everything to get through 2023 and what could be a recession that he feels is going to be potentially as bad as 2009. So I just wanted to clarify that for you guys if you had any questions. Otherwise, thank you guys so much. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.